All right, all right, all right. Let's go, let's go, let's go. Continue my recording. Amazing, amazing, because tonight is Monday Markups. Tonight, I want to make sure that you guys are all on the same page. Have your markets set up, prepared, ready, because as the markets continue throughout the week, no matter if you're tapping into New York session, Asian session, London session, it's all going to be an opportunity for you to maximize. So let me actually come over here. And one thing I'm going to do is let me just share this on here so we can get everybody on board. But I want to make sure that you guys are on this chat, are on this Facebook group, because there's going to be a few resources you guys are going to be able to plug into. The first one being the Telegram for the public community. The second being the Learning School to tap into growth and continual education for the foreign exchange markets, right? So what I'm going to do is let me just post this right here, and I'm going to give you guys those links so you guys can access it, because throughout this week, we're definitely going to have additional sessions, and definitely this is going to be a great place for you guys to maximize. So we'll just do this. Matter of fact, it is A-OK. Everybody should be on the Telegram anyways. So what we'll do is, let me just drop this Facebook group in here for you guys. If any of you guys aren't in it, let's definitely get in there. What you're gonna notice is on the first post, you're gonna see access into the Learning School right here, the Learning School link, which I'm gonna drop right there for you guys as well. You're gonna have access to the Telegram, where of course I'll post any sessions that we have for the public community in there. And then as well, let me just drop this information for you guys who are on, Facebook doesn't want to show love. We're having issues playing this video. It's all right, we'll stick with Zoom for tonight. We have the recording, we got the recording. So we can stay on there. All right, so as we already know, what we're gonna do is we're gonna tap into the largest financial markets known as Forex. Now, before you guys tap into these markets, there are a few things that I wanna make sure that you already know and you understand. So with that being said, for those individuals who are on this call, if you can just do me a favor, if you guys can hear me loud and clear, can you just type in a 777 on this? Because I wanna make sure you guys can hear me, you guys are ready. You guys are ready to take this Monday Markups to the next level. I appreciate all of you guys getting on here. And for those who are on Facebook, I guess they're missing out tonight. So definitely, if you guys can, feel free, share the link, friends, family, everyone is welcome as we continue to grow within the community. One thing I want you guys to notice is no matter what type of platform you have, whether if that's a laptop, a tablet, a mobile device, one thing you're gonna notice is, for example, TradingView. TradingView.com is gonna be a website that all of you guys should be able to access. You guys should be able to tap in and download the app, right? So this is something that a lot of the tools that we'll talk about are gonna be on TradingView, so nobody has a problem with accessing, let's say, MetaTrader 4. I know with the latest updates in the Mac, some of those newer versions, are having problems trying to access it, or you got to do it through like a third-party type of VPS thing. It can get very stressful. I understand. So what I want you guys to do is, even me myself, being a Mac user, I have my trading view. I mark up my charts, and then when I'm ready to execute, I'll place my trades on my mobile device. So what I want you guys to notice is, aside from just getting set up, there's two different ways that you can analyze the markets. And before you guys even tap in and start, placing some trades, you need to understand, with this market that's open 24 hours a day, right? 5 days a week, weekends, of course, if you want to tap into crypto, there's going to be specific pairs that you want to trade at specific times. So this right here I put together just as a reference to helping you guys maximizing. And I'll be honest, I've been trading Forex for years now. You guys can go on my page and notice I've been having Monday markups for years now. right? I've been able to help others simplify this process. So I want to make sure you guys understand, you know, this right here is of assistance. It's not the holy grail, right? But best believe it's going to help maximize your experience, cut things straight to the point when it comes to your trading. So like, for example, this black L area is literally an area of time where I'm just resting. I'm spending time with family. I'm catching up on a book. Maybe I'm just, you know, taking a nap. Why? Because during this time, the market likes to act real spooky. It likes to create a lot of volatility, a lot of spread spikes. So one thing we need to realize is as we're tapping into the markets, no matter what time of the day it is, I understand it. There's over 175 people on this call. What that means is there's over 175 different schedules. Not everyone's going to have the same schedule. So if you can at least maximize with the pairs that are, you know, better off with your lifestyle, you'll be good to go. So for example, coming into tonight right now, we're dealing with that Asian Sydney session. So what that means is right now the time is 9:11 Eastern. So what that means is if we come over here 9 o'clock, we're going to be focusing on our AUD pairs. We're going to be focusing on our JPY pairs, our NZD pairs, maybe looking into some of our Swiss pairs, right? And then later on, moving into our New York session, we're going to focus in on some other currency pairs. So what you need to understand is with the markets that are open 24 hours a day, it gives you opportunities. You just got to make sure that you're trading them at the right time so you can find them. So one thing you're looking to do is obviously you want to be able to buy a currency, sell a currency pair. Now, one thing I want you guys to notice is before you tap into any chart, there's two things you need to understand. There's a fundamental analysis and there's a technical analysis. So for example, whenever you go into your learning school and you watch any of these videos that you're learning about patterns and candles and trend lines and support and resistance, all of that is technical, right? But then when you go into a website such as Forex Factory, such as MyFX book, economic calendar, this is going to reflect now the fundamental aspect of trading. Nothing to scare you, nothing to say, oh my gosh, I got to do all of this research. No, not at all. In fact, you don't need to know any math. You don't need to know anything socially, politically about a company. You just need to understand that when you're looking at the markets, the first thing you need to do is you need to go to this website right here, myfxbook.com. Let me drop it in there in the comments for you guys, right? The next one is Forex Factory. There's a few other ones, but we're going to stick with these two for today. And what you're going to notice is when you're in MyFX book, the economic calendar, when you're in Forex Factory, the main thing you're looking at is there going to be any news going on? You know, sometimes you literally look through here and you'll look throughout the week that's coming up ahead, and sometimes you might even see that there's different events going on, speeches, announcements, you know, just ordinary news, numbers, unemployment. All of that affects a currency, right? So as a trader, the main thing you need to understand is if there's going to be 9:30 p.m. moderate news on AUD, I know around that time my AUDs might be a little bit more volatile. Right around 9:30, it might see some spikes, right? So when you're looking to trade the market on a fundamental aspect, what you need to understand is, first off, whatever has a red folder, high impact news. High impact news. Orange folder, moderate. Yellow folder, low. Same with MyFX book. They'll say it. Now, in MyFX book's case, they'll tell you how much time is left. They'll literally count down the seconds before the news event comes down, right? So these are little things that you're going to account for. Nothing to really, you know, sway you to saying, oh, I'm just a fundamental trader, because this only happens specific times of the days, specific days out of the week. You know, sometimes you're going to notice some news events don't do anything. You know, so when you're noticing and you're trading a lot of these low impacts, look at the pair, India, Poland, Brazil. None of those have anything to do with the major pairs we're trading, right? Now, when I come into my New York session and I see that the US dollar has high impact news, then I know anything that has a USD is gonna be impacted, right? So what we gotta do is notice we have my FX book and then we have Forex Factory. So coming into tonight, it looks like in the next few minutes, we might see some AUD news. Let's see, what, anything else? Nothing, my FX book doesn't even show it. And that happens. That's why I want you guys to understand there's no right answer, one or the other, one's better than the other. No, I look at both. One might show me something the other doesn't. One source might be better than the other, right? Now, the next thing we're gonna do is we need to make sure that all of you guys are on tradingview.com and create a free account. Literally, I was trading for 2-3 years with a free account because I didn't really utilize the pro services. I didn't need to have all these fancy screens on my pairs. I just needed just one chart. So, you know, there's no preference in a sense of upgrading to TradingView unless you need the other alerts or the additional indicators that it adds. But make sure for tonight, grab the free account, create a free TradingView account. And what you're gonna notice is a few things. As everybody is getting set up, they have their TradingView. You know, these other two news events, there's nothing that's gonna impact us for tonight. So make sure you guys have them already bookmarked so you know whenever I'm trading, hey, is there gonna be anything going on and what currency pair is gonna affect. So now let me just take that bad boy away. So TradingView, you gotta think of TradingView like a sport, Forex like a sport. You know, you have your knee pad, you have your cleats, you have your basketball, your bat, your baseball, right? When you're in trading mode, you need to know everything that's happening that's relative to Forex, right? Now, obviously with TradingView, you can not only tap into Forex, but crypto, stocks, you know, whatever options there are here. Now, one thing I want you guys to do is just go to the chart area so we can go straight to our markups, because a lot of this stuff can definitely distract you. Some people might say, oh man, crypto's the new best thing. Now next thing you notice, you're just looking at all of these different ideas and it's steering you away from what you should really be doing. So yes, they're all there. Yes, it's all great. But what you're gonna notice is even on all of these things, there's people who just want one thing to happen. Like, oh, it's either gonna be supportive or resistant, right? Or some of them are just dead, right? Or hey, this is just happening. It just broke that, you know? With the market, there's no right answer. That's why when I give you the learning school, I want you to understand, hey, there's Japanese candlesticks. That's one decision factor. Hey, there's trend lines and counter trend lines and channels. That's another decision factor. Hey, there's support and resistance, right? Because now as a technical trader, what you need to do is you need to come over here, you need to go into your chart and you need to get to work as a technical trader. So the first thing we need to do is, now that we're looking at these charts, what we need to identify is which currency pairs we're gonna look at. Now tonight is Monday markups. So what that means is on Sunday, on Monday, I'll be honest, the market opens on Sunday. Everyone gets so excited. I'm just like, okay, let me just get some more rest because Monday markups is really what's gonna spark everything, because then we have the new cycle of the market. You know, the market just opened. So sometimes you'll see that the market may gap, right? So realize sometimes on Sundays, sometimes on early Mondays, you might not see the true moves you're looking for. But best believe as the market goes and progresses through the week, if you have a better understanding of what you're looking out for, if you have your markup, you will be good to go. Give me 1 second, 1 second. Can you guys do me one favor one last time? If you can hear me loud and clear, can you just type in a 222 222? All right. Just want to make sure we're good to go on the audio, because this information cannot be the sauce. Listen, we got to make sure everybody knows what they're doing. So what we need to do is tapping into our session tonight. The first thing I want to do is right now, I want you guys right now to drop the currency pairs you guys are looking at. Drop the currency pairs you guys are looking at, so I could look at them as well with you guys. You know, we got some CAD JPY, we got GBP JPY, we got UJ, We got AUD USD. We got NZD USD. We got EJ, Euro JPY. AUD JPY. NZD JPY. One thing you're noticing is with this market that's open 24 hours, there's so many different currency pairs that we can trade, that we can tap into, right? So there's truly no rush to try to press one opportunity, you know? So what we're gonna do is we're gonna definitely pull up a lot of these charts. And the great thing is tonight, that is Monday markups. I wanna make sure to take it a step slow. We are gonna analyze a lot of these markets, but best believe what I wanna do is I wanna make sure that you guys understand and know how to fish, right? Understand and learn how to fish properly, not just pick up the fish, not just grab the fish, no, right? So what I want to make sure that we do is, no matter what currency pair you're in, here, the first thing I want you to do is delete, erase everything. You know, start everything as a clean slate. Because sometimes what happens is coming into your new sessions, coming into your new day, you want to bring those past problems. Those past, oh, I didn't get the catch that I wanted. No, you just got to remain consistent. You just got to keep swinging. You just got to keep being alert. So what I want you guys to do is we're going to just, everything here is empty, empty, empty. The first thing I want you guys to notice is as I was clicking on all of these different currency pairs, one of the main things is the same across the board through all of those pairs. And that's a few things. You see these candles? No matter what currency pair we're in, no matter what time frame we're in, you're always going to be dealing with some Japanese candles. There's 3 different types of candlesticks that you're going to be dealing with most of the time. Japanese candles, the line chart, and Heikinashi. You know, yes, we can go into Renko, but that's way advanced. That's not even necessary for right now. So for right now, what we need to first start off with, as a beginner, your Japanese candlesticks. Do not get distracted at these candles because they show you how the market may potentially move. They give you an idea where there's hesitation, right? So what we're gonna do is, I wanna make sure you guys at least tonight go through your Japanese candlesticks, draw them, identify them, right? Whether if it's bearish or bullish, the engulfing, the hammer, your tweezer tops and bottoms, morning star, evening stars, right? Because aside from those Japanese candlesticks, which everyone's gonna eventually start learning, what time frame do you need to identify those on? You can start looking at them on the hour, right? You can start looking at your candlestick patterns on the 30 minutes, right? So what I want you guys to do is, before you go into your charts, before you place a trade, see which candlestick pattern is present. Because what happens is a candlestick pattern shows you an area of hesitation. So like, for example, like right here, this is the hour. Let me go into we can go into the 15, see what's around here. This candle right here, you see how that was what? Strong, bullish. I mean, strong, bearish. That engulfed all of this. We already knew we were looking to sell, right? That area, once you identify that pattern, that helps you identify that this area is also a potential area to look for what? That rejection. So if the market ever comes back to that area, you can look for that rejection. So same thing in the sense where you see a hammer, right? You are already confirming that, hey, yes, it does confirm the buying, the motion, but guess what? That gave you the zone. So once you saw another what? So once you identified another, look at that, another what? Engulfing candlestick, we already know it's a sell. So like these candlesticks help you identify when you're looking to buy the market, when you're looking to sell the market, but also give you that area of reference to look for opportunities. So the first thing I want you guys to do is, now that you know and you can identify your Japanese candlesticks, what you need to do is you need to understand that there's 3 different types of market conditions that we're going to deal with. And if you guys can understand this, you are already, you're done. We're done. You can understand this lesson for tonight, and you can take the training, and you're probably already going to start seeing some blue, and it's already happening, right? So let's talk about the 3 ways that the market moves. As you can see, the first one is dealing in an uptrend. And there's obviously a video in this, so that's why I'm not going to go too slow on it. What you notice is when you're in an uptrend, the market is actually breaking these new high points. Because what you got to realize is when the market was at this point, all of this did not exist. Right? So as the market is breaking higher, these are called higher highs. Right? Because in an uptrend, you're going to see higher highs, and these low points, what do you think is happening to the low points? They're not going down, they're not moving sideways, they're going up with it. So these higher lows are creating what? That uptrend flow to go higher, where you're looking to buy the market, where you're looking for the market to potentially do what? Pull back to an area of hesitation, you know, for you to then buy it. A lot of the times people want to rush the movement, and they don't want to see it play out. And then that's where they get caught up, right? So sometimes you might be dealing in a market that sometimes it's just moving sideways. It's moving up higher, then it's a little bit, then you don't know what it really wants to do. But overall, when you look at it on like the 2 hour, when you look at it on the 4 hour, all you notice is that it's just moving sideways. This is called a consolidated or a ranging market. It happens a lot of the times, especially after you have a lot of momentum. So you might get an example where the market is going crazy to the upside, it reaches consolidation, right? And then it's gonna continue that momentum. But for right now, when you're dealing in consolidation, seeing that it's showing these random splurges of impulse that you don't know what it wants to do, you just stay away, right? So for right now, you only know of, hey, I'm looking to get in and maximize on an uptrend. Or hey, I'm looking to get in and maximize on a downtrend, right? When you already noticed, and we came from this market, this is the highest point. Did it ever reach that level, that area? No, it was lower. It was lower. Right? Look at, as the market's breaking these low points, is it going lower? This is telling me we're dealing in a downtrend. So as the market makes a new low, what do we want to do? We want it to pull back. That's where we want to look at the entry to take it lower. So what I want you to do is identify and make sure now that you understand your Japanese candlesticks and how the market moves. Because now we can effectively move into Monday markups and rock it. Right? So the first thing we need to do is, before we tap into any currency pair, like just imagine, if I tell you and I say, hey, on the 30-minute, identify how the market moves. Like I wasn't even trading EJ yesterday, but based off of what I was showing you guys, you can see that this is what? An uptrend. You can see that as that market broke these areas, where? Look at where the pullbacks were to. As it broke this structure, where were those pullbacks to go higher, right? So these are things that we want to be able to look at what time frame? On the 30, on the hour. Identify your market. This is EJ, but what we're going to do is we're going to do the markup process on one currency pair slowly, and then we're going to do it on all these other currency pairs as well, because some of them definitely look pretty interesting for sure. Let's see this guy going. All right, so what I want you to do is, no matter what currency pair you're looking at, the first thing you need to do, most of the times, in a sense, somebody asked, how long have you dealt with a lot of consolidation or a range? Sometimes you might deal with it for 4 days, 3 days, 2 days, right? Because what you're doing is, when you're looking at your markets, you're not looking at them on these smaller time frames, you're looking at it on the 15. So just imagine if you're dealing in a consolidated or a ranging market. Look, this one was started on the 9th, and then literally was still dealing with it from the 9th to the 10th. you know, from the 9th to the 10th. So you just gotta definitely be patient. That's the key thing, patience, but still understand the markup process and have your levels so you can see where the market's doing. So the first thing we wanna do, write down, is you're gonna go to your 4-hour time frame. Your 4-hour time frame. And what you're gonna do is, if you want, you can simply click on where the market is currently, right? Because what you're gonna do is you're gonna move back in time and you're going to find this level. So when you're going back in time, you see that level? If it was difficult in the past, now it's not. What's the first thing we did? I said, okay, let me just click on the current time. That's where the market is right now. I'm gonna go back, I'm gonna find that color. There I am. What am I looking for? I wanna make sure that there's something called price, which is above us, and price, which is below us. Both of them match, so now I know I can utilize this area. So when I say on your 4-hour, go back in time and find price action, what that means is go back in time and find the sharp points that are near where the market is right now. So we can use the past to help us identify any possible moves in the future. So what we're gonna do on the 4-hour and the 2-hour, I repeat, on the 4-hour and the 2-hour, you're gonna go to your line chart. And this is simple. You have a balloon, right? You have a balloon, you blew a bubble. You know, you have a little balloon. It comes right here, what is it gonna do? Boop, it's gonna pop. Why? Because it's a sharp point. So what you're gonna do is every time you see a sharp point, you can either identify it with a circle, or you can just listen to me and just put a horizontal line right on top of it, right? What I'm gonna do is I'm gonna show you how both scenarios play out. Because once you have all of these sharp points identified, what you are really trying to do is you're trying to identify which key levels are significant on the 4-hour and the 2-hour. Why the 4 and the 2? Because to be honest, you're probably looking to get in a trade and you might, maybe at least you want to be in and out of the trade, maybe 3, 4, 5 hours and you're done. Sometimes people don't want to be stuck in the same trade for days, for weeks. That's swing tradings, right? Sometimes you just want to be a short-term, an intraday trader. If you're looking at the markets differently in every days, every weeks, you got to definitely understand what are you looking to get out of it and what type of style of trading am I allowing? Am I scalping the market, right? So when you have these sharp points identified, you know, I clicked on all the sharp points. Let me just fast forward because now we can just see on the 4-hour. Clearly we need some levels above, that's great. But what we wanna be able to notice is these levels are gonna be significant. They're gonna help us identify any potential areas that the market may reach, that the market may react from. You know, just imagine if we were on the 15-minute and this right here was our playbook. They said, Anthony, you have Euro JPY, here's the playbook. We got the levels. These levels are gonna tell us possible rejection, possible where the market could react to. You just gotta play it out, right? So as this market reacts, guess what? You already know this is a lot of rejection, right? You already know and you can identify later on, we'll do the zones and everything. But I just want you to see for the sole purpose, these levels are not always gonna be perfect, but once you start applying what you know with other technicalities, once you start applying trend lines, right? Just imagine if somebody who learned about zones knows that this is rejection, 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 then they know if this is broken rejection and it pulls back, it's gonna go up. Right? If somebody learned about trend lines, they know it broke the trend line. We need a pullback. And guess what? It broke again. So guess what it did? Pulled right back. All of those would help us signify that we're looking to take that market on up, right? So the great thing is here, we could even, like I said, we're gonna go to the 4-hour. We're gonna go to the 2-hour. We're gonna go back in time and identify the sharp levels. Above and below, above and below. So let me just do that real quick so we can move on to the next step. The next step, after we do this on the 4-hour, after we do this on the 2-hour, we're gonna go to our 1-hour time frame. And we're gonna do something called drawing our restrictions, rejecting the market, putting pressure to the chart, right? Because a lot of the times you're not just going to get into the market and immediately just enter. No, you got to definitely be a little strategic. What can the market do? Where can it pull back to? Where can it move? You know, where can it react off of? Right? So going back to our 4 hour, it looks like we have price above, we have price below. We look at our 2 hour, it looks like we're good. Anything missing, you could just click it, right? Let's go to the 1 hour, and this is where we see a little bit more. On the 1 hour, I wanted you to reject the price. So what that means is, when you're drawing a downtrend, this is a down, this is an up, right? When you're identifying and putting pressure to the downside, you're always gonna do it off of the 2 highest points. Always try to do it off of the outside. Restrict that market, right? Something like this. So for right now, you're already seeing, oh man, it's already broken this. Yeah, of course. Well, you would have really caught it down there if you were trading yesterday. And if you guys were looking at how the market moves on the 30-minute, you already know we're dealing in a boop, 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 right? So for right now, this is something called momentum. This is a force. You can't do anything crazy right now when you have a force because you don't even know how far it's going to pull back to or if it wants to continue that force. So for right now, what we can do is restrict the market on the hour. As you can see, this is no longer a restriction because it broke loose, it broke free. So what I'm gonna do is, I'm gonna restrict it. Ready? From the bottom, the 2 lowest points, boom. The next low point, boom. The outskirts, right? The outside. This is my restriction, right? The reason I don't wanna cut too much into price is because you might get an early entry, but it might be a fake out. You know, if we go to the 30-minute, first off, if you look at this market and say, hey, Anthony, what are you looking to do? I'm going to say, well, first off, we just came from all that momentum. I hope you're not in this. I hope you're waiting because we don't see anything right here. If anything, it's different when we see momentum, when we see it pull back, when it makes the move. So then we can catch it and say, okay, at least we know where we can take it to from there. We don't want to just react and just think that, hey, we need to be in the trade to be trading. No, because watching it could be your setup too. So what we're going to do is, you see my restriction, it's there. My next restriction on my rejection on my hour, I have to identify this because this is something called a breakout. So if the market is pulling back, it's possibly looking to retest. So I do need to see how that's reacting and how the market's going to move from it. This right here is just the ugly scenario, EJ. But what helps us next is when we go to our 30-minute. What are we doing here, Anthony? You're going to go back. Simple, simple, simple. And all you're going to look at is the wicks. Like you see these wicks right here? You want to be able to go to your 30-minute and just identify your wicks because they help you create amazing zones of hesitation, amazing zones of where the market could pull back to. If you notice, I'm just identifying my wicks. My wicks turn into zones, right? Now, what I want you to notice is from the past, right? I have some zones. From the past, all you have to do is, of course, you can right-click settings where it says coordinates. The number 2, just add a couple 5s, you know, make it. But if you notice, look at this zone. You see how it also intersects with this zone? That's one whole zone right there. So if you notice, here, let me just double click that. Oh, why do you think it hit that and then what? Pull back. So for right now, let me just identify these zones because they help me manage and see where the market's moving, where it could potentially pull back to. And when you would have done that from the past, I did not do anything of this future. But now when you can go into your 15-minute, now you start to see a little bit more of a clear picture. Okay, now what's next? Well, now it's game time. You know, now it's time to start looking for your setups. What is the market doing? Is it breaking these new highs, right? Is it coming to pullback areas? What is it showing? So like right now, looking at this EJ, it looks like it came out of a lot of momentum. I can't really decide if that was yen-based or euro-based. So what I'm gonna do is I'm gonna just leave my restriction right here, leave my restriction right there, and I'm gonna just step away because this markup is done, right? The great thing is we have our zones, we have our levels, we already can see what the market wants to do. So if later this bad boy says, okay, later on, I might throw a little momentum, I might pull back. Oh, I might throw a little momentum. This is already indicating possible sells. So guess what I'll do? I'll wait for my pullback. I'll catch my entry wherever it gives me. I'll minimize my stop loss. And then I'll take it down to my next level. But for right now, for me to get into this trade right now, I would literally have to put the same risk parameters. That's why I'm not even worried about it. And I don't even know if it's going my way because this one could simply pull back and go higher. That's why it's key to see the pattern, see how the market's moving. This hesitation, no, 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 you're not catching me. No, no, no. Not this guy over here. And if it wants to pull back and really show us that move, like I said, I'm taking it from one level to one level, right? For right now. Because EJ looks ugly. So I'm gonna just leave it alone. I'm gonna give you guys this quick markup because this is just something I'm gonna keep my eye on. If I see the painted picture, maybe it'll take a few sessions, but you never know. So we gotta watch out on that. Let me just drop this one. I'm not too worried on EJ. I'll probably just keep an eye on it. I'll set my alerts, but I'm not looking to execute, right? So let's actually look for some things that I look for that helps me identify, hey, this might potentially be a good setup, right? As you already know, the markup process is simple. We start off on the 4 hour, right? We go into our 2 hour, we look at our levels. We go into the 1 hour, we draw restriction, right? Restriction on the 1 hour is beautiful. It's a beautiful thing. You know, once you have restriction on the 1 hour, you can catch a breakout, right? That's why that 1 hour is always nice. The market needs to make some moves, right? So yesterday, looking at this GJ, what do we learn about the 30-minute? You know, I wasn't trading London, but sheesh, that's an uptrend in my eyes. That's a breakout, right? And all you're doing is you're applying the same technicality. So let's actually fast forward this. Let me look at some pairs like UJ. UJ is interesting. Interesting to me. This is consolidation. Consolidation at its finest. It's moving sideways. It's trying to fake you out one way, trying to go the other, right? So I definitely want to bring up UJ so we can analyze it. And then let me see if we can look at another. Like this NU, what is this? This is all momentum. So already you gotta be so patient. It already broke all of that. The next solid restriction is already this whole area that it broke, but it's really already throwing momentum. So this pullback might just want to go higher. So that's why I'm saying you gotta wait it out. Let's see which other pairs there are around here. Like look at that EN. That bad boy looks not too well. I mean that's U-Swiss, but EN's on the same boat. Soft pushes, nothing aggressive. Remember when I say you look at your pairs, go to the 2 hour. This is just consolidation. This is ugly. This is nothing. Let's go to ACAD. We had this motion. I got stopped out, I'll be honest, on that one. My stop loss was minimal. Why? Because I wanted to make sure to keep it under that. You see how it broke and created that fly. That's what a stop loss is for, to protect you. But I do like EA as well. So let's see. Let me bring up this EA. Let's see if we can catch this right here. Because if you notice, what's the first thing I was saying? When you go to that 30-minute time frame, what are you looking for? You're looking for the market to start showing you an identity, right? Like right now, this is already telling me what potentially could be a what? Does anybody know what this could potentially set up for if it pulls back right here, you know? I'll potentially be looking for this market to go lower. So let's actually pull up EA and we'll pull up, I think, UJ, because those are two beautiful pairs for tonight. And then if anyone has any questions, I'm definitely going to be looking at the chart. Start at the daily. Yeah, that training, yes. Yes. It does say start at the daily, then you go to the 4 hour, then you go to the hour. Yes, yes. Now I'm cutting the noise, just starting at the 4 hour and letting you guys know on structure on 2 and 1. Reason being is because that training, the sauce that was dropped right here, this sauce, almost 4 or 5 years old. So I'm making sure to give you guys the updated sauce as we go, as we go. That's why I need you guys to have the foundation. Think about building a house. Everybody needs the solid foundation so then they could get fancy. Garages, pools, you know, this many floors. So at least let's all get the foundation set. And then we can customize it. So looking at this UJ, we had UJ and we got this EA. All right. So let's just drop down. We can do the daily. And the reason that the daily and the color codes are okay, like if you notice, when I do my Monday markups, I'll just keep it simple with one universal color, just because we're doing the basic markup. But when you're doing your extensive daily 4 hour, the color codes are important. Because what you're doing by color coding is you're defining the type of move it's having. So for example, when you look at your daily time frame, or even then drop down to your 4 hour, what you're really looking at, the first thing you're really looking at is the moves that's happening, like the impulses. Boom, boom, right? Boom. Those type of moves, those impulses. Because when you look at those moves and then you go to your line chart, those are going to be the key sharp points you're looking for on your daily, 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 right? Because you're not going to go too crazy with your levels, but best believe when you go in, best believe we got our, here, let me make it red for you guys. We're going to do a quick throwback on the colors. Loving it. Right? And the color codes are good because I can understand if it reaches the daily level, it might not just perfectly react. Yes, it might react, but realize it's the daily time frame. Some candles might pull back to the daily a couple times, but understand that the daily is there, right? So let me just click on my sharp points from my daily. I can go to my regular candles. And here, matter of fact, let me just do it from the past because I was a little too present. Right? What you're looking for is what? Those sways, those moves, those impulses. Boom, 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 boom. When you do this, and you just go to that line chart, those are those sharp points you're looking for, right? So let's identify those sharp points on the moves right there, right there, right there, right there, right there, right there, and right there, right? Now you got these levels. This is from the daily time frame. Now you can see how they're reflecting, how they're reacting, the type of move it's creating now when you can go to the 4 hour, right? And when I say that, it's like, in a sense, just imagine, you know that this is what? Boom, boom, it broke higher. Guess what it did? It pulled back. If you know this is a daily, you're dealing in what? An uptrend. You already are looking for all pullback territory. So now you can say, I'm going daily, daily, daily. But you guys got to realize this is more of the swing. This is more of me having to hold my trade for 4 or 5 days, right? That's why I want to at least start for that 4 hours so you can still get the structure levels, because you're still going to understand. Now that I have my daily points, now I'm going to fill in my 4 hour. Now I'm going to fill in my hour, right? So this is where you'd still go into your line chart and you go back in time. And now we're going to make it orange for the 4 hour. You're not getting too crazy with it, right? And if the red already identifies it, leave it alone. So like right here, you can see in this sense, in this case, if I say, hey, we're dealing with a momentum, we have a pullback, right? After that, you see more momentum. Realize that the markets aren't just moving straight up and down, they're moving sideways. What is this market? You see consolidation. As it's bouncing between two of these key levels, boom, boom, boom. You can see as the market breaks not only once, look at that, it breaks the daily, pulls back to the daily. That's your entry for the sell. Then you come again, entry for the sell, boom, right? So these are definitely gonna help you identifying your points, because even like right here, you see how this daily level wasn't as significant, but that 4-hour level was. And if you would have gone through your candlestick formations, you already understand this right here identifies as sell, right? So when we go now into, we can fast forward where we're currently at, we just want to make sure, like right here, there's definitely a 4-hour level. There's definitely, you see all those sharp points? We need to identify that, especially before we go to our 2-hour. Because at least now what you're doing is you're seeing how strong that force is. Like right now, UJ is just bouncing. UJ is chilling on the daily, it's relaxing. My question is, from all of this, does it want to retrace a little bit more, or does it at least want to pull right back into structure? That's one question. But I can't do much because that daily is holding it down. That level is holding it down. So what I'm going to do is here, let me go back to my 4, because I do have a lot of space. Like if you go back in time and you go to your line chart, if there's a lot of white space and there's a sharp point, you need to identify that. Because those sharp points identify where the market has reached and turned around, has reached where it pulled back to. Like I can already say, okay, the market reached here, then reacted, right? Before it went all the way up there, it broke here, then had to pull back, then went up a little bit more, right? So I want you guys to go on that 4-hour, grab those lines, grab those sharp points. If you want to know which ones are the best, you can go to your candlestick and draw it out. Ready? Okay, if I got in here, I want to boom, 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 boom. These are going to be my entry points, my exit points, places where I want to get in and out. If you really need to picture it, everything, right? And then once you get into your line chart, you're going to say, okay, what key levels are near there? What key levels are represented there? Ready? I got the line right there, boom. And then you got all these other points are good. Line chart there is good. And then I just got to delete all this so I can just move a little back to where we're currently at. So let me just add in these bad boys right there. And now the hour. What's so important about the hour? The hour is where you start to do a lot of price action. The hour is where you can start identifying what is this market really trying to do, right? On the hour time frame, how far back on the daily and the 4-hour, when you're identifying your levels, the key thing is you want to identify price action. Sometimes on the daily, the 4-hour, it may be a year back, 2 years back, right? When you're on the hour, you may just be going back 6 to 9 months to identify it. You know, you might be going like right now, we are in June 15th, and I'm going to be able to use some of February. In fact, look, I'm going to use February because you see all of this space here. I'm going to use all of this right here back in February to what? Go to my line chart. Because now that we're on the 1-hour, we know that the market may reach it, but it might not be as significant as the 4-hour. You know, that's why I color coded them so you can understand that yes, these levels are all important. Yes, because it's shown in the past. Yes, the market pulled back. That's why I can at least know if you got your levels identified, you can see the roadmap. Oh, if it hits this and doesn't want to keep breaking, now I know why, right? So at least if you have these levels, now when you go into the current time, it's just a matter of playing it out. You can now start to see, just by looking at some of your color codes, what do you start to see? Right, we came from this daily level, there's another daily, right? This 4-hour levels, they pulled back. Look at your zones, all of that, right? Where's our 30-minute? Where's our hour? We can grab some of these wicks, right? Look at how it breaks and pulls back. So these are all significant. Like right now, UJ is dealing in consolidation. Consolidation. And it's just, for right now, the only thing that UJ can tell me right now, based off of what we see, is that this zone, this area right here that we have, has been showing me only rejection. Boom, 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 boom. So for right now, I cannot do much. I cannot do much. However, if I restrict this on my 1 hour, it's going to get pretty interesting once the market starts to break, right? What's the restriction on the hour to the upside? You already have it. It's this whole zone. It's a different story once we break out of that, because then it could simply do this and go even higher. But for right now, we already got the rejection we need, right? So what we're gonna do is, on this UJ, the play that I gotta be patient for is either the momentum break to the upside, or if you now go to the 30-minute, it's not showing us too much on the 30-minute. We're still in ugly consolidation. At least I can grab some more wicks, right? At least I can grab some more wicks so I can possibly see where this market at least might hesitate or stop. Where am I grabbing my wicks from? All of that past. Look for how the market has pulled back. The wicks that are important are this. These are the type of wicks that are important. Ready? At one moment, the market was serving support. Support. You see how it broke it right there? Then it was tested. Resistance. Resistance. That's a good zone, right? So when it came back there, guess what it did again? Resistance. Resistance. Then it broke it, and then it became support. So that's a nice zone. It's applying your technicalities. Do it on the 30, because now you can see how it might help you identify the market. So for right now, UJ, you see this daily level, that's gonna dictate everything. Do we get the breakup or do we get the pull down? Because even if we can get the pull down, this is the 30-minute, this is me just looking at it. For right now, I need to see a break. Ready? I need to see the break of that daily. Here, let me make sure we are back on track. Look at this. If we get this trend line break, not only is that going to be great, because it already happened, this is the pullback. This is trying to fail this. If the market fails that and breaks lower, that's the confirmation that we can catch any pullback and go lower. How far low? Well, look, we have our level right there. You see that orange level? We have our zone. That's going to be our first target. You see that other level right there? You see our zone? That's going to be our second target. Right? You see this level? That's definitely going to be our next level. Right? That's all dependent on this UJ. This might be a trade for tonight, actually. So we'll be looking something around here for the break pull, stop loss, nice right above here for 30. And then we can push it into the first target. And 17 pips is okay, but we're going to be able to go for 30 and then 45. Not too bad. And that's all based off of if we get the break, the pullback, right? This is UJ. So this is simple. How do these markups work? Since today is Monday markups, if I don't say, hey, sell stop or whatever, that's a trade. A markup is this right here. A markup is, we know our levels. Here, let me just clean this up. All right. Now I'm not gonna cram too much information, but remember, what's the key thing we need right here? This is interesting. We need the break, right? First off, hold up. We need the market to fail this. Failure, fail that. Right? We need the market to fail this high right now as it's doing this. Where will it, how could it fail the high? Well, if it comes to this 4-hour level and comes down, that's a failure. I don't want it to go higher before it starts pulling back, right? So right now it's in a pullback. This is gonna be deciding what it wants to do. This daily, I like the daily level. What's so powerful about the daily? It has respect. After that, once we can get the pullback, that might then say, okay, this is what support, 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 support. So if it breaks all that support, the pullback will say, okay, now we are resistant. So you just do what? You grab your handy dandy stop loss, you place it up there. My stop is above here where the market has never been. I'm always placing my stop loss above where the market has never been. I'm familiar that there's a zone here. So yes, the market could just come here, hang out for maybe 3-4 hours, pull back a little bit more and then go lower, of course. I got my target there, got my target there. We'll see. Am I saying it could push new lows? We'll have to wait, but at least we got our first 3 targets for 50. Right? So this is gonna be the setup right here that I'm gonna send out to you guys because it's very simple. Where would we look for the trade setup? Once we get the momentum, confirm the momentum, the pullback is gonna be the beautiful key to the blue stream, to the blue profits, right? So our stop loss is gonna be above here, 30 pips. This is gonna be just one simple setup, target 1, target 2, target 3. So I'm gonna send you guys this screenshot right now. All right. Now the great thing is we already have all of this rejection that's confirmed, meaning if it goes the opposite direction, if it breaks that, be aware that it's looking to pull back and go higher. This is the only setup because we have all the confirmations. Look at this candlestick, ready? You see this candlestick? That is a bearish engulfing candle. That helps us identify potential sells, right? We're just putting the puzzle together. If we catch a trend line break, we don't just catch the break right here. No, we catch the breakout, the pullback to go lower. We place our stop loss there. It's all systematic. Not, oh, I got to place my stop loss here because it's going in to draw down too much money. Not, oh, I got to close out my trade right here because I over leveraged. Listen, the stop loss by law is right there, 30 pips. Now you need to identify what risk parameters can I trade that's not going to go crazy on my account if I have a 30 pip stop. So I can finally go to sleep and not have to worry about the trade. Because I know we're going to win some, we're going to lose some, and at the end of the week, we should win more. So should we set a pending order? We can. That is an option. What kind of pending order would you set in that scenario? You can do right now. If you wanted to come down here and activate it on this push, that would be a sell stop. Yes, that is an option. You can put a sell stop there. But the main reason I wouldn't do it just yet is because I haven't confirmed it. Right? I haven't confirmed that break and the rejection. You know, you don't want it to break and then next thing you know, it comes in and stops you out and then drops. You would have been like, man, it really didn't, you know, do what we were looking for. In fact, it just came here and maybe just gave you a wick. Maybe overextended and activated, but then came back up and was just a wick. That's happened over here in the past. This candle was all the way down here. It looked all bearish down here, right? But then it was just a wick. So that's why I wouldn't be too aggressive on the pending. But it's not too bad of an idea if you are still happy with your 30 pip stop. I'm happy with that either or. Like right now, if you want to set the pending sell stop at this price, 107.23247. Like that'll be the setup. So either or, I like it. This is going to be UJ. I'm going to keep my eyes on it. Let me send it out to you guys so we can continue our night. There's over 248 people on this call. I appreciate all of you guys on this call because first things first, we need to get to 300. We need to get to 300 because each and every week we are going to do some amazing giveaways to our community and especially those who need it during this time. The first giveaway is very simple. I want you guys to just listen to me real quick. I gave you guys the link. Yep, I gave you guys that link. Cool. Let me just check out something real quick. Okay, you see, EJ isn't doing nothing, so we leave it alone. EJ, we got marked up. All right. So what I want you guys to do is, I want you guys to take quick note, family. we're gonna be doing a laptop giveaway, right? The first one is this week. For all of you guys on this call tonight, this is your opportunity to learn how you're going to be able to go into the raffle, the drawing, whatever you want to call it, right? So what we're gonna do is this video tonight, I'm gonna upload it on YouTube. This video that we just had through Monday Markups, because it's a public, call. I'm gonna upload it on my YouTube channel for AJTFX Learning. What do you have to do? You can just go on YouTube, type in AJTFX Learning, right? And then I want you to subscribe, right? If you haven't done so already, there's amazing content in there. Best believe some of the content from your learning school, right? But one thing I want you guys to do is on that video that's gonna be released, I just want you to type in done. Once I release the video on YouTube tonight, after I finish this call, I'm gonna post the link in here and I'm gonna say, hey guys, if you guys want an opportunity to win the laptop, all I want you to do is subscribe to the channel and say done on the video. The reason being is because I'm gonna do the little random chooser, the random picker from the YouTube comments. And I've had people comment to me and they say, Anthony, I'm so interested in I love what you're doing. Listen, there's a friend of mine who would love a new laptop. And I said, listen, get there on the call. So what I want you guys to realize, if you win, you can pay it forward to whoever you need it to be. Right now, there's over 250 people on this call. Let's see how many people follow instructions, because on Wednesday, which is gonna be our next public call, I'm literally gonna go on my YouTube, John. I'm gonna literally click it, and then we're already gonna decide who's the first winner right there. Winner, winner, chicken dinner. Nothing crazy, nothing difficult. All you guys need to know and how to do is follow directions, which I'm gonna post. But I gave it to you now, so you already know what to do. Go on my YouTube, subscribe. And when you subscribe, you're gonna get the updates on when the next video pops up. You'll either get it there, or I'll post it in the Facebook group, or I'll post it in Telegram. You're gonna simply comment on the video, because you already are watching every of this, right? If you haven't taken notes, you can take some more notes. But best believe on Wednesday, I'm gonna choose the winner from tonight. So if you have any friends, family, who's probably interested in winning a laptop, simply get them on the video. Have them take some notes. Type in done, and they will have an opportunity. Right? So much love, appreciation. Let's continue moving on to Monday Markups. So what we're gonna do is, where do we find the class from Friday? So Friday we had, if you guys go into our channel, into the Facebook group right here, on the right side, there's gonna be a topics tab right there. I'm gonna start making topics for the videos that we create. So you guys can simply click on the topic, and the first one that's gonna pop up is the video from Friday. So the Friday call that we did that overviewed the indicators and some great training, it'll be on there. I'm not sure why it's acting slow right now. But yeah, there it is, Friday, boom. If you guys need the link from Friday's call, here, let me just give it to you guys so you can check it out as well. Boom, 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 best of luck. This is just the beginning. Let me say that again, this is just the beginning. So let's just make sure everybody's good to go. I appreciate that. I'm gonna mark up 2 more charts because we got a few. We got these 2. And then like, some of these are just gonna be very patient moves. Very patient moves, like NU. Like all of this break, all of that, it just tells me I need a pullback. I'm gonna pull back to go back higher. So here, let's do NU. Let's look at NU, right? So NU is very interesting. This is the interesting thing about NU. On the 4-hour, you notice that it's been breaking these highs, crazy momentum, crazy force, right? What I want you guys to do is, I want you guys to literally notice. Now, when we go to the 2-hour, go to the 1-hour, I wish it was so perfect. You notice, boom, boom. You see how it broke low and it pulled back? That would have been where a lot of people would have been at least able to pull it lower. I liked it. That was a good play. That would have been the sell if you would have taken it. You know, you would have grabbed at least 70, 60 pips on that push to the downside, right? you would have seen that it easily pulled back to this area that was broken, right? Right here. But what I don't like about NU right now is, look, the same zone, the same area. You see what, look at what's happening. The market already broke above it. So what that tells me is that I'm not looking to sell right now, NU. Unfortunately, not yet. Not yet. I'm not looking to sell NU just yet. Let's see, where would your stop loss be? 662, 662. That's not too shabby. That's a nice tight stop. Here, let me just grab 662 up here, 6625. Okay. Like that's not a bad stop, you know? If it wants to kick back into gear, it has space. That's your stop loss right there. But go into your 30-minute right now and just look for a little bit. Something gets me a little scared with this 30-minute because like this setup, yeah, if you wanted the setup, like I saw that you had the setup for the sell. First off, I would wait for this trend line break and then I'd probably take the low. So I at least know if the pullback will be worth it. But for right now, it's like, it's hesitant. Like, it's like, doesn't know what it really wants to do. We don't want it to kick back. And if you guys remember on the 30-minute, what are we looking for? Okay, this is the lowest point. You see how these high points, what happened? The market eventually broke it. It pulled back. You see how it broke it and pulled back and broke it some more? What it really just broke is not only these high points, but also all of this area right here. So I'm very curious to see, and that's why I like the, I wouldn't rush it, right? I wouldn't rush to sell just yet, you know? The reason being is just because it still can pull back. If it was a nicer sell, would have been under this low, but unfortunately it already kicked up too aggressive. So hopefully we don't have the revenge traders, because the revenge traders are going to try to catch every selling opportunity. But what this market might just do is it pulls back a little bit more and might just say, you know what, Anthony, let's go up, right? And what might just happen is it might just pull back. Let's say if you grab your Fibonacci from your low point to your high point, we might see it possible. We got to see how it reacts around this 382. Yeah, we got to see how it reacts, not only around there, but around here. Yeah. Like these two areas are gonna decide, you know, if I like the sell or not, because this is gonna be my reaction up, but it's a different story once I see, get ready. It's all about the clarity. Why do I like the 30-minute? Because at least on the 30-minute, if I see something, get ready. It breaks the low, it pulls back. It breaks lower, so I know let's catch the pullback. You know, there's no, and that's just on my end for the sell. I would just be patient and wait it out. I'm not saying it's not a bad setup because maybe they were looking at it on a bigger time frame. You know, if you looked at it on the 4-hour, this pullback is still the first pullback, you know? We got one pullback, you know, go lower, pullback. So it's not bad. It's not bad of an entry. I would just be a little patient with it. Now, what we can do is mark it up. So let's actually start off and let's go in and do our 4-hour level on our line chart. Now, if you notice, this right here is a lot of current price. I am not going to use that. For the people who are asking me how far back do I go, look, all of this, I do not see price, I do not see price, I do not see price. Okay, I finally see some price here. Let me just go a little bit more. Okay, I finally see some price here. Remember, I need price above me and I need price below me. I need good price, not just some random splurge to the upside, not right. I need sharp points. So I'm going to go back, and right now I'm in 2018, right? Now look, by the looks of it, I'm going to stick right here with this May 2019 area into August, right? We got, what's the key thing I want? Sharp points above me, sharp points below me. So when I go my 4-hour, right? Of course, if you guys start at the dailies, do your daily, do your 4-hour, jump to the 1-hour. Okay, let me just change the colors. But just a very quick way you could already do Because if you're still looking for your 20, your 30 pips, that's the 4-hour levels will give you that. Let me come over here, change the color real fast, grab some of these sharp points. This is NU. Talk to me, NU. All right. So now I got the high ones identified. Now let me identify the low points. I need sharp, 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 sharp. Oh, looks like all the other ones were identified, right? If it's already clicked, you don't got to re-click it. So now I could what? From 2019, let me fast forward. You see how we have our levels identified? Let me talk to you guys a little bit. I hope you can at least take this moment and just listen and hone in on something, right? Last week, this was selling. What was so beautiful about this sell? Last week, here, let me show you guys, because this is what the process does. When you got your levels, when you go on your hour and you restrict your market, that restriction always helps you for various things. Like right here, you see how it broke? I'd hate to be trapped, because some people maybe thought that was a pullback and got trapped, finally trapped, and boom, you know? That's why I just want you guys to notice, and yes, you are gonna lose some trades. Yes, yes. Hopefully you're not the emotional type that every day, every trade you lose, you gotta be upset because trading is not for you in this scenario case, right? So looking at this NU. Now, on the hour, those breakouts are great. Those restrictions are great. The restrictions are great, right? This is gonna be my restriction on the 1 hour. Until I see that it's showing me what, then I can take the move. Until then, I don't see it just yet. What's gonna help me see a little bit more? You see these wicks? That's where the hesitation is. Hesitation of what? Price. If it wants to break higher, lower. If the market just wants to respect it. You see, here, let me just zoom in over here, because I don't want you guys to think that I'm just, you see this wick? You see the wick? I'm identifying the wick to the body of the candle. And now that allows me to grab, you see this point, how it came over here? That was questionable. Not only was that questionable, but if you guys look at your patterns, you already know that this is another pattern to identify the buy. It's all gonna start clicking and coming together, I promise, right? So what we're gonna do is we need some more hesitation so we can at least maneuver this trade, whether if it wants to go up or whether if it wants to go down. When do I draw a channel? When can I draw a channel? Simply, what is a channel? Well, you have parallel channels that are just two trend lines. That's just connecting the tops and connecting the bottoms. If I want, yes, I can draw that channel right there. Helps put a lot of restriction. If you want, you can really tighten it up and say, I'm very curious now, and I'm gonna put right there. That's my interest point. And this is what I call the waiting room. The point, the area where after you have your restriction, you just have to wait it out. Because if the sell is so powerful, guess what's coming? Momentum, pullback, and then we take it. If the buy is so powerful, it's pulling back, momentum, pulling back, going higher, right? So in the meantime, if it's not showing you your move, we just let it do what it needs to do. We're gonna go on our 1 hour, we're gonna go on our 30-minute. We're gonna grab our zones, our wicks, watch this. Our wicks. There's a lot of ugly wicks over here. Like if you look at this, ready? There's wicks over here, boom. Let me identify. You see the wicks down here? Boom, I would identify that, of course. You see these wicks right here? Boom, I'll identify that. You see how some of those wicks fall in line with some of your key levels? It all comes together. It happens. It just creates a stronger confluence. So you want to identify those wicks at the bottom, those wicks at the top. Because look, by you identifying this wick right here, even as the market broke higher, pulled back, broke higher, look at the pullback, and broke higher, look at the pullback. You know, it's just a matter of you seeing the clarity. So look at this area. You see how the market pulled right back to that zone. So let me just fast forward this right here. Give me 1 second. We got some artists. I appreciate the art family. But if you can keep the arts on your notepad, much love, much love. All right, so let me just move these bad boys over here. All right. So when you fast forward, now you see we're dealing in a zone. We're in an area of hesitation. We're just chilling. Based off of what I see, I can't see too much. There's just a lot of ugly hesitation, right? So based off this NU, I gotta leave it alone. I wouldn't even be in it right now. But something that I am curious about is this momentum. Why? Because it broke this high, right? So I'd be careful. I'd be careful. Right now, it's an ugly market, so I'm staying away. I got the markup. It might not be ugly later on during New York, during Asian. Right? Look at UJ. Remember what we need on UJ. The break, boop, the pullback, boop. Oh, that's the most beautiful one out of all of them tonight. EJ, look, EJ's not showing me what I need. It already broke one momentum, so clearly the pullback and higher test is necessary. Let's leave it alone. So let's continue. The next pair that we can check out, I'm actually curious about this. I'm very curious about this. I like that GJ, but for some reason, something about GU was telling me that London might be different than the yen session. Okay, let me see. Yeah, we got this GU. Like right here, GU is actually very beautiful. Ready? Let's go to the 4 hour. If you notice, looking at GU right here, GU is in a very interesting place. Just by looking at the 4 hour, the 2 hour, right? These are really helping you see what? Clarity. Clarity in your candles. Remember, some people go into the minutes time frame and start to trade. Imagine how many minutes are in one 4 hour candle. Don't get stuck. So right now I'm interested in this GU. This is actually a very interesting pair for later tonight. Because although we do have a nice momentum, what do we really start to see? Okay, we have the high point. You see how it broke all that? Well, what did it break? All of this, right? That's why the first time it pulled back, right here, it wanted to go lower. So my question is, based off of what I know, a downtrend, it goes lower, it pulls back, it goes lower. Technically speaking, as long as the market pulls back and does not go higher than this area, I'm looking to sell. Just based off of what we know, right? So what you can do in this GU, this one's actually very beautiful as well. I'm gonna actually do this markup instead because I know we have London session coming up later. We're gonna go into, look, look at this. Look, this is interesting actually. Because look, all of this wick action, right? From the past. This is why the markups are key. They tell you the story of everything. It breaks, boom. Support supports, it breaks, and that same price area rejects. So hopefully we just need another rejection. That pair doesn't look too bad. You know, this right here would be a nice, if it could hold the 50, maybe this right here would just be the pullback that we're looking at. 4 hours from now, it's 10:20. Oh, that's definitely 2:30. Yes. Interesting. So that's actually very interesting to me. This GU. So one thing I'm going to do is let's actually do a quick markup to it. We're going to go on our 4 hour level. Are you only drawing those zones on the 30-minute? The zones I'll draw on the 30 on my 1 hour. And main thing I'm looking for is the wicks. Why the wicks? Because the wicks tell you where the hesitation of price is, right? So if you can grab those wicks, you got the hesitation, right? Like right here, the wick, the hesitation. It helps you because you already know where you can push the market to. You know, if you got this wick over here, you know, you got these wicks over here, and you know that you got the pullback right over here, you already know I can take it to my target 1, my target 2, my target 3. So, you know, it's all going to play interest into that. I like that GU though. Very interesting. So what we're going to do is let's go to our 4-hour time frame. And what we're going to do is we're going to identify our line chart. Because when we go to our line chart, we're going to look for price action above the price action below the price. We're not going to use the current price. No, no, no. We want the past. So is there any up here? No. Is there any down here? No. We want to see price action above it, below it. Sharp points are great. So look, we went all the way back to May of last year to help us identify the potential moves from June this year. Yes, that's called price action. That's called technical analysis. Analyze the price, study the price patterns, right? So on our 4-hour, we're gonna look at these sharp points. I'm clicking on them real fast. Once I got my sharp points here, let me just fast forward, click these down here, 1 moment. Boom, boom, and then I got some up here, 1 second, bang. Now let me fast forward to current price and bada bing, bada boom. Looks like we just need to identify those down there, but that's fine. Look at that. You can already see that this whole level is sneaky right here. So looking at this GU, now we can go to our 2-hour. If there's anything I missed, right? If there's anything I missed, you click it. So based off of what we have right here, just based off of this, now go to your 1-hour. Now this is where you're going to start to see a little bit more. The first thing you can start to notice is your levels, right? You can start to see that when you're trading, when you're on your 15, when you're on your 30, these levels are going to help. You see the market. Visualize where it can push to, where it can pull back to. Why do you think it stops at specific areas or pulls back to areas? Just imagine this. This candlestick pattern indicates a sell. A few candles later, it indicates another sell. If you guys aren't noticing what's happening, look, it's showing you the rejection to the level, and then you get the momentous candle, which is the 3rd one, which is the confirmation for the sell. So if you want, these levels are still key to see how the price reacts off of it, right? What type of momentum you get, right? So what you want to do now is when you go in here, we're going to look at the hour. The restriction, the rejection is going to be very tight. In fact, look at this. This has just been moving on up. Like if you try to grab this low point and the next low point, you're going to cut through price. So what you need to do is this right here. Let's see, what's the outside, just the outside. Because this is not my decision. This is not my decision to enter the trade. This is my decision to see how the trade navigates. Boom, pulls back, right? We already know it's coming into a rejection area, so that's going to be one type of rejection. But the next rejection is going to be the nice impulse I get, right, to the downside. So that's why you have your zones, you have your restriction. But that's my restriction right there on the bottom. Now on the top, rather than a trend line, because you already know that it broke all of this, rather than a trend line, I'm just going to simply use my wicks right here and identify this zone. And the reason I'm just going to identify the zone is because simply, remember, I'm going to identify this zone. But according to what we were breaking down, if this wants to show me that motion to the downside, it should not break any higher than this point. So you see, all of this is so much rejection that even when you go into your 15, just imagine, there's also a 4-hour level there. So what do you think could possibly happen? Right now, the time is 10:30. So guess what? We might just relax a little bit, pull back a little bit, maybe hit this level. Oh, maybe break this, maybe try to reach it one more time. Oh, then we break. And then I'm going to say, okay, it's London time. Did it do what we needed? Right? Because then if we can get a nice pullback and confirm those breaks. That's the momentum we need, right? And that's the setup. So that's just a little patience right there. If it does not paint the way we need it, we don't chase it, right? And then, so that's gonna be GU. GU. Remember that zone, grab that zone, it's gonna be beautiful. That 4 hour, look, you see these wicks? It's not just this wick. If you notice, it's really this whole area of a wick, of all of this rejection. So be patient, be patient. Don't get caught up trying to perfect the entry, no, because once it flows, it's gonna flow, right? Now looking at AU, it's already flowing, right? Looking at AU, what we identified is breakouts, market movement, right? We could already see all of that. So if you guys are looking at AU, the first thing you can start to do is go to your 2 hour and you can already see it. What is AU really trying to possibly do? Maybe test these highs. It clearly broke this right here. So my question is, if it wants to pull back, those wicks are hesitation. If it wants to pull back, I personally on AU, I wouldn't even rush the sell because this is that same play like I was on NU. I'm like, yo, both of them are throwing too much power. That too much power can really get people caught up if they're looking at just selling. But best believe if it goes back into structure, that's a nice setup right there. Especially if it throws that rejection to this level. So would I rush this AU? Not at all, not at all. I want to definitely see a lot more plays because this is not a clear picture at all to see more. Like this age, like this UJ is actually interesting because it's coming, it's trying to test us. It's trying to test, it needs the failure. So make sure you guys got this UJ so you guys can keep a nice little on it. So what I'm gonna do is let me just drop this URL for UJ. We talked about the markup process. We are not done here. What I want you guys to do, family, is realize throughout this week you have currency pairs to trade. You know, tonight we only discussed UJ, we discussed EJ, we discussed NU, you know. We also talked about how to mark up these pairs. So no matter which pair you're looking at, here we talked about GU. So no matter which pair that you're looking at, make sure you have the markup. Make sure you understand what's happening. Make sure that you remember and you're looking and identifying for, man, this UJ is gonna be nice. Make sure you guys got the markups, please. All right. So what I'm gonna do, family, is please stay tuned, stay tuned. I'm gonna actually finish our call right now because like I said, today was Monday markups. This is exactly